VIX, the fair index. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we go here to indexes and we look at the S&P 500 volatility index. 9-ish% here from the 52-week low, and we are minus 62-ish% away from the highs. Hence, there's not that much fear currently in the market. So here is the chart of the VIX. So we see here that we are at a historically low level. There have been periods like between 2012 and 2019 in which we were more consistently at a very low level. You could argue quite strongly that those were very different periods to what we have now in terms of the outlooks for the economy, the debt cycle, and so on and so forth. So I would argue that we are at, given the context, we are at a very low level, which means that it wouldn't be a terrible idea to consider some interest, some opportunities here for the VIX, because the VIX is definitively one of those products that is especially beneficial to buy low, because it's it's a type of insurance. So we are at a very low level here. This current level has a strong tendency to be bought and result in a little bit of a spike. Though we have to go all the way back here, to 2020 and the early part, of course, and the later part to really see major spikes in the VIX. But if you look back here, it was early, January in 2020 that the VIX reached a very low level. So here we have this super complacency, and then it spikes like crazy. So definitely buy low, sell high. Looking here at the daily data points, you see it in more nuance. I think that we have some kind of time cycles here. Yeah, something going on here also with time cycles, but the cycles have differed a bit over time, but it clearly moves in waves. Yeah, so let's explore it a bit further. Yeah, and we will look at the UVXY ETF a bit later. The reason why we analyze VIX and also to an extent the VIX futures, it's simply because they are better to see patterns and trends than analyzing the UVXY. So looking here at the RSI, we are at a historically very low level here. Looking at the weekly data points, you can see the trend very clearly yourself. Also the distance here from the purple 20-week moving average, green 50-week, blue 100-week, and also the red 200-week moving average. This is at a historically low level. Going here to the daily data points, you see a similar thing here on the daily data points as well. Okay, so then we will look a bit at correlations. So here is VIX in the background, and here we have weekly data points, and there is a minus 22% correlation with the S&P 500, and there's a 97% positive with the VIX futures. So even though the VIX and the VIX futures, they are different, but you can see here the correlation is very strong. It is not perfect, but it is really, really, really strong. With the UVXY, there's a 40% positive correlation, and then 17% positive here with the dollar index. Then we go to the daily data points. Minus 28% here with the S&P 500. We are at 87% positive here with the VIX futures, which is, it could of course be stronger, but it is pretty strong. Then we have a 27% here with the UVXY. So if we do take here the VIX futures here in the foreground, then we have 36% positive correlation here with the UVXY. On the weekly data points, we have a 33% positive. So let's now jump into just to illustrate it. Okay, UVXY like that. So this is the leveraged ETF. So this is, if you go here to the weekly data points, then you see that it's throughout this time frame, it is down minus 99.94%. So this is one of those ETFs that just decays like, yeah, there's severe decay when it comes to this ETF. So definitively not something that is suited at all for longer term holding. Though for shorter term trading, like hedging, speculation, it works. See here when there is a spike here in the VIX, like here all of a sudden this one makes a 43% move. And there's also opportunities here in the options market with the UVXY. When we look at the seasonality of the VIX over the last 5 years, and November is usually calm, but December has a tendency to see a bit of a spike. Over the last 10 years, well, 89% of the time we tend to see a spike in the VIX. And over the last 20 years, you see that even though November has a tendency to be quite calm, December can be quite strong. The different context for us now is that we are, at a very low level on the VIX, and we are currently in October. So it begs the question: how much more downside is there really to the VIX at these very low levels? But we do know for sure that December and January tend to see an increase here in the VIX. So there is some interesting seasonality here. So the UVXY provides 1.5x leveraged exposure to an index comprising first and second month VIX futures positions with a weighted average maturity of 1 month. So yeah. So that's the key thing here about the UVXY. It's a bit eccentric, I guess, 1.5 times leverage, and it's about the VIX futures, not the VIX itself. Expense ratio is a bit on the higher end of the spectrum, but that is to be expected. Assets under management is pretty substantial, $1 billion US dollars. So to sum up, the UVXY is a way to bet on an increase in the VIX. There are, of course, other ways as well. But getting into like the VIX futures and the VIX itself, that is definitively for more professional investing. Because so I just think that at these very low levels and also the seasonality on the horizon, I think that there is good reason to expect an increase in the VIX.